History of Microfinance in India. Introduction. Welcome back to our channel, where today we delve into a fascinating topic that has changed the lives of millions in India, the history of microfinance. In this episode, we will uncover the origins, milestones, and impact of this incredible financial revolution that has empowered the underprivileged and transformed communities. Microfinance is a financial service that provides small loans to individuals who are unable to access traditional banking services. Section 1, Story. To truly grasp the significance of microfinance in India, we must first explore its roots. The concept of microfinance emerged in the early 1970s. India, like many developing countries, was plagued by poverty, with a significant portion of its population excluded from the formal financial sector. The need for a sustainable solution became increasingly urgent. Our story begins in the 1970s when organizations like Seva Bank and Friends of Women's World Banking started experimenting with microfinance models. These pioneers aimed to empower the rural poor, especially women, by providing them with the means to start their own businesses. As we fast forward to the 1990s, the microfinance movement gained momentum with the establishment of the self-help group (SHG) model. SHGs are small groups of individuals who come together to save money and provide collateral-free loans to members. This model proved to be incredibly successful and continues to thrive today. A watershed moment occurred when Muhammad Yunus, the founder of Grameen Bank in Bangladesh, was awarded the Nobel Peace Prize for his pioneering work in microfinance. This recognition brought the concept of microfinance into the global spotlight and inspired many individuals and organizations to replicate its success. Section 2, History of Microfinance in India. The birth of the first microfinance institution in India, the Self-Employed Women's Association Bank, Seva Bank, marked a turning point. Seva Bank aimed to provide low-income women with access to small loans, enabling them to start or expand their businesses. This groundbreaking initiative laid the foundation for a vital movement that would soon empower communities across the nation. As word of Seva Bank's success spread, more microfinance institutions emerged throughout the 1980s and 1990s, fostering financial inclusion on a larger scale. These institutions focused not only on providing credit but also on educating borrowers and promoting their entrepreneurial skills. One crucial institution that emerged during this period was the National Bank for Agriculture and Rural Development, NABARD. Created in 1982, NABARD played a pivotal role in supporting microfinance institutions with refinancing and capacity-building initiatives. By the turn of the millennium, microfinance had gained significant traction, proving its ability to generate positive social and economic impacts. It was in this climate that Muhammad Yunus, the founder of Grameen Bank in Bangladesh, received the Nobel Peace Prize in 2006 for his pioneering work in microfinance. Yunus's recognition further catalyzed the Indian microfinance sector and attracted attention from both the government and private investors. In 2010, the Reserve Bank of India (RBI) became the regulatory authority for microfinance institutions, ensuring ethical practices and protecting borrowers' rights. India's microfinance sector experienced significant growth in the early 2000s. Non-banking financial companies, NBFCs, and microfinance institutions started expanding their reach and providing small loans to millions of underserved individuals. This expansion, coupled with the use of technology and mobile banking, revolutionized the delivery of microfinance services. However, the sector faced a major setback in 2010 when the Andhra Pradesh crisis occurred. A surge in over-indebtedness and aggressive loan recovery practices led to a government crackdown and a decline in investor confidence. This crisis prompted regulators to introduce stricter regulations to protect borrowers and ensure the sustainability of the microfinance sector. Today, the microfinance sector in India continues to evolve and adapt to the changing needs of its clients. It has proven to be a powerful tool in poverty alleviation, women empowerment, and rural development, creating countless success stories along the way. Section 3: Microfinance Crisis in India. Microfinance, as you may know, is the provision of small loans and financial services to low-income individuals and groups. This industry has been thriving in India for years, providing a lifeline to millions of people who don't have access to traditional banking services. However, around 2010, the microfinance sector has been facing a severe crisis. Many borrowers are trapped in a cycle of debt, unable to repay their loans, and falling into further poverty. So, what led to this crisis? One of the major reasons is over-indebtedness. The microfinance crisis has also been aggravated by other factors such as high interest rates, aggressive recovery practices, and a lack of financial literacy among borrowers. Due to the lack of proper regulation, financial literacy and monitoring, some microfinance institutions were providing multiple loans to the same borrower without considering their repayment capacity. This led to a situation where borrowers were taking new loans to repay previous ones, creating a vicious cycle of debt. As a result, many families were struggling to make ends meet, and some even resort to extreme measures to escape their debt burden. Section 4: Impact of Crisis on Microfinance Industry. The crisis served as a catalyst for transformation, leading to better regulations and increased transparency. It also inspired innovations in microfinance channels, such as mobile banking and digital platforms, enabling more convenient and efficient access to financial services for the underprivileged. Today, microfinance institutions in India have diversified their offerings beyond microcredit, branching into savings, insurance, etc. This holistic approach aims to provide a comprehensive suite of financial tools that can uplift marginalized communities and foster long-term stability. Section 5: Conclusion. As we conclude this episode, it is evident that the history of microfinance in India is a testament to the immense power of financial inclusion. From its early beginnings with Seva Bank to the transformative movements of today, microfinance has emerged as an essential tool in eradicating poverty and reducing income inequalities. Thank you all for watching. If you found this topic interesting and would like us to explore more captivating subjects, don't forget to hit that like button, subscribe to our channel, and turn on the notification bell. And, as always, share your thoughts and stories in the comment section below. Until next time, keep embracing knowledge and let curiosity be your guide.